Welcome, everyone, to the show. Today, I'm joined by Jay Jackson, who's the CEO of Abacus Global Management. It's a company turning life insurance policies into investable assets. So, we're going to talk about how lifespan data is reshaping retirement planning, wealth management, and overall the future of finance. So, Jay, great to have you with us today. Thanks for joining.
Yeah, super excited.
Let's start with an overview. What exactly is your business? How are you turning
Sure.
life insurance policies into investable assets?
Thank you. Abacus Global Management, we were founded over 20 years. We're a highly regulated industry. We're regulated in every single state. And what's fascinating is that at its core, where we began our business was helping people better understand all the assets that they have. And one of the biggest assets that they own that they don't even realize it and certainly don't treat it like one is their life insurance policy. And it goes all the way back to the Supreme Court, right? When life insurance was first formed. And people typically take out life insurance to say, oh, I want to protect my heirs. They pay premiums into it, but they don't treat it meaning like an asset. If this were their home, they would pay their mortgage payment. And at the end of that time period, they would expect to have some sort of market value. What the Supreme Court said was that all the way back in 1911, that life insurance is personal property. It's not just an asset, it is property. And what that means is the premium payments that you pay in every single month, you're building equity. And here's a startling statistic. There's $14 trillion of life insurance in force in the United States. It's 2.5 times the U.S. residential real estate market. It's massive.
Wow.
It's crazy, right? However, 90% of those policies will never pay a claim. 90. How is that possible? And it's because we don't think about it as personal property. What's amazing is that if you fill out a life insurance application in the United States, it says owner. But do you know what it says in Canada? Applicant, because you don't own it. Right? So, this is one, we're very fortunate to have life insurance as an asset. We just have to treat it that way. And so what Abacus does at its core is help people better understand, specifically starting with life insurance and now their other financial assets, that your life insurance is personal property and that because of that, you have liquidity in this contract. And when you have volatile markets like we have today, you can ultimately find that there's liquidity in areas that they didn't realize that they had, and it's a $14 trillion market.
Can you just explain to me, maybe just backing up a little bit, why is it that 90% of the policies will never pay a claim? What are some of those misconceptions? What are some of the dynamics that lead to that? Yeah, what happened?
You take somebody who's maybe not like you or I, but maybe somebody who's 80 years old. They bought a policy 25 years ago when they were 55, and they said, I want to protect my family. And they did. They paid into that. It offered protection for their family if something should happen to them. When they turn 80, their kids might be 50. And they're saying to themselves, like, gosh, what do I need $1 million life insurance policy for? My kids are fine. My wife's fine. We're in retirement. We're good. That life insurance policy is an expense. They might be paying $2,500 a month for that contract. What are their solutions? What are their options? Option A, they just stop paying on it. And when that happens, that's called a lapse. They're like, oh, this is an expense. I'm just going to stop paying this $2,500. However, what we present is an alternative solution. And the first thing we do is say, well, look, let's re-underwrite you. Let's solve for what the current value is. We know at some point in the future, ultimately when you pass away, it's worth $1 million. But what's it worth today? And to get that, you have to better understand how long you're going to be in that contract, right? What's your lifespan? And so we aggregate data from all of their medical professionals and help them better understand with people just like them all across the country who have had a mortality and help them better understand what their future lifespan is. And so probabilistically, we might tell that 80-year-old based upon all of your current conditions. You have, your genetic profile, you have heart-related disease, cardiovascular disease, you might have kidney disease or diabetes. Based upon all of those things, your projected average lifespan is 7 years. And you know what the number one response I receive? No way.
Oh, no?
I'm never living that long. You are crazy.
Okay.
Right? And it's like, and it's because maybe they're uncomfortable, but we have to come back to them and say, well, actually, science is going to keep you there, right? Modern medicine is designed to do this, even if you're uncomfortable. So let's plan for that, right? And this has so many applications. But let's start with the insurance. Now we establish that, okay, Mr. Jones, you're going to be in, on average, probabilistic lifespan of 7 years. You're going to be in this contract for the next 7 years, meaning that you have to pay $2,500 a month for the next 7 years. Your family will receive $1 million. You should pay yourself an interest rate, right? You should pay yourself some rate of return over that same time period. Ultimately, what we come back and tell them is that minus what you might pay in premiums, minus what you might pay yourself in investor rate of return, that contract might be worth $250,000, $300,000, $400,000, right? Depending on what their monthly payments are. And I think that's incredibly valuable because they were going to simply stop making payments on it for zero, receive nothing, and say, oh, well, it served its purpose, but it's their property. And it's worth $250,000 today. Now, sure, 7 years, it's worth $1 million. Now, we make sure we get beneficiary sign-offs and letter of competencies. We want to get the estate involved. But when you think about what's happening with senior population and they're worried about how they're going to pay their medical costs and how they're going to pay for, and that cost burden goes to their kids. And now here's another untapped resource they can do. But what did I really highlight on that I think is very exciting? Think about all the lifespan data. We've done this thousands and thousands of times. We have the type of medical data and lifespan data that Google would be jealous of, right? We're a publicly traded company, and that data is incredibly valuable. And because of that, some of our largest clients are insurance companies, state pension funds, and potentially even the federal government. Because how people better understand and apply their lifespan, I think, is going to be one of the most transformational things we see happen in financial services. Sure, we'll pay out hundreds of millions of dollars per year to seniors by showing them what the liquidity is in their policy. That happens every year. I mean, hundreds of millions of dollars is what we'll pay out. However, translate that to what's the number one fear of someone about to enter retirement? Running out of money.
Yeah.
Right? That's what everybody's terrified of. I'm not going to have enough money to meet my demands. Shouldn't you take an extra step and understand in a more clear way how long you're going to be in retirement? Wouldn't that relieve that stress if you knew that said, hey, my savings are designed based upon a true customized solution, not the general population, but specific to you, your health, your family history. This is what's happened, and therefore this is how you should plan in retirement. And that's what we're bringing to financial services. So Abacus Global Management is a financial services and wealth management company. We're an alternative asset manager because we actually manage these assets, these policies, and we also manage ETFs. And we're an originator and market maker in this asset in a highly regulated industry where we source these contracts.
Mm-hmm. Tell me a little bit more about this lifespan data, because without obviously giving away your secrets, but is it the way you're accessing data, the way you're using perhaps technology and machine learning to analyze the data? Tell me a little bit more about that product itself.
Sure. And with machine learning and AI, it's gotten even better, right? That's really been a nice enhancement to be able to process massive amounts of data in a very effective and certainly a more expedited way, where this was very manual in the past, where you'd have to read thousands of pages of medical files to come up with these assumptions. But what effectively we do and what makes this data so important, it's not that I would say that we have a better mousetrap here. What we do have is the actual data, and that's what nobody has. So we receive permission from that policyholder to go and retrieve their medical data. That HIPAA released data is then sent to us. You can't just go and gather that data. So if you're somebody who wanted to say, gosh, I want to do what Jay does, you can't without the medical data, without the HIPAA releases from each individual person. Now we're providing them a financial incentive to do that. So, that's really the secret sauce is the ability to aggregate the data and providing an incentive to do that. And now we take the data and apply it in a lot of ways. Like, for example, how do we work with pension funds across the United States? We work with some of the largest pension funds in the U.S., right? And we sell that data back to them in twofold. First, we ran through an election period that highlighted some issues that were wrong with Medicare and Social Security, where they were having trouble tracking mortalities, meaning they were paying people who had passed away and they're still paying them checks. The same things happen in pension funds. What we did with our data was that we went a step further and we said, gosh, we could better understand forecasted lifespan data if we have a broader sense and understanding how and when mortalities occur in the United States. So we built connections from 30,000 sources, from funeral homes to counties all across the United States. We aggregate that using large language models and AI to be able to tell us with a 99% accuracy in 48 hours, right, when that mortality occurred. Now, it takes Social Security Administration maybe 9 months to get 30% because it's self-reported. There's no motivation for an audit. And then imagine what we do for the states and those pension funds to ensure that they're no longer paying people that has already passed away. So we're helping the states really reconcile and audit and save millions of dollars. So that data is applicable in several areas. And in addition to that, it's also applicable to what we do at Abacus Global Management, which is financial planning and life solutions.
Why is this data only, or at least in this form, only accessible to Abacus? Could another entity come in and provide similar financial incentives as you?
Yeah.
Is it exclusive to Abacus?
They can. I think, what financial incentive are they going to provide, right? Like, I gave you an example of Mr. Jones, 80 years old. Is there some company who's going to pay him $225,000 for that data? See, because you have to understand, is that the data itself is a result of the benefit we're providing to our clients, not the opposite, right? We're not going out buying data because if you could, you'd get run out. What instead we're doing is that we're providing a solution and a real positive outcome for our clients. The data is a result of that. So we don't have a cost related to that data, and that's why people can't get in this business. It's really hard for them to get it.
Mm-hmm. Got it.
They can buy it for me.
With population dynamics now, obviously people getting older and populations aging, how do you see risks and other investment opportunities developing over time, and how do you model that in?
Sure. You know, the dynamic that's happening in the U.S. population set, right? I mean, we've all heard the numbers around baby boomers aging, 10,000 a day. And then, the next question is, who's supporting them on Social Security? Right? Because that's probably the biggest number when you see this population shift, is that we have fewer children or fewer workers supporting our retirement population, and how are we going to fund that gap? I think the trend we're seeing is that people are going to have to take more responsibility for their own financial awareness, specifically in retirement. And that's why I think that's where the biggest boom is going to happen in financial services and financial planning. And the only way you can address that is addressing lifespan, addressing health span. If people are going to live longer in retirement, how long? Right? Should I be taking a withdrawal of 2% or 4%? How do I best invest and allocate my money? That's going to be the population shift that's going to make the biggest difference. Because what we do know is that Social Security, at some given point in time, we don't know yet when exactly, but it is not going to probably be available. It's going to be sucked dry. So then that onus, that responsibility is on us to self-fund. And you need as much data and financial solutions that are appropriate to your data, and most importantly, customizable solutions for you. And that's what no one's talking about. Everybody wants to put you in an index. They want to put you in some broad product that doesn't actually apply to you, and then say, oh, well, the returns long-term will be X. What we say is, returns are second to your plan. What are we trying to actually solve for? And then here are then the returns you need to support that plan. And that plan is driven by the most valuable data point you have, your lifespan.
And in terms of other variables that you're considering as well, obviously there's advancements in biotech and longevity and aging research. How do you incorporate that kind of data and that kind of research, and how does it impact your portfolios?
Yeah, so what happens with that research, and you look at medical data and research, it's fascinating, and it will continue to increase. But what we do know is that research right now is conflicting, in a sense that I open a lot of conferences and I say this, and it's startling to people. And they all then try to tell me they've got an uncle or they've got somebody who lived X, and they don't believe it. And I'm like, great, show me the death certificate. Because as it stands today, there's not been a reported human being that's over 6 foot tall that has lived past age 100. So what are we doing, right? There is no bottle of magic potion youth. There is stop wasting your time on trying to take a pill or any other shortcut. You know what has the biggest impact on longevity? 90 minutes a week exercise.
Nice.
Get after it, right? Like that's
Yeah.
what does it, right? You know what? Like one of the number one causes of death that no one talks about is falls. If you have a fall in your 70s or 80s,
Yeah.
your probability of mortality is incredibly high over the next 2 years. Like it's massive. Like your lifespan goes from 6, 8, 10 years. So if you fall down at 82 and you might have a 7 year lifespan and you have a fall, it's now 2 year. What can cause a fall? How about think about grip strength, right? Think about things that can hold you up, right? Those are the things that are impactful to longevity and lifespan. I think that medical research over time will have an impact, how we do things like gene therapy, but we're miles from that, right? Like, I point out frequently if you cure cancer, right? Do you know what the impact is to average male lifespan in the United States? 3.2 years. If you cure every disease that we know of, certainly the top 10 diseases, it adds just under 6 years of lifespan. So if your average lifespan male is 77 years old, you're talking about 83, not 110. So, and I know I'm a lot of fun at a cocktail party. They're
No,
like,
this is why I'm trying to get my parents to start strength training and
right. Strength
going to the
training
gym.
is huge.
Yeah,
You,
yeah.
you want to give them another gift to get them to do it. I tell everybody this is that take some time and give your parents the gift of a second language or a third language. Somewhere, a language they don't know. And the reason why is that what does that do? Neurologically, it helps offset long-term dementia, short-term dementia and potentially neurological disease because they're very active in learning that language. They're engaging pieces of their brain that they maybe weren't doing so before. But what else does it do? Think about it. Community. They're going to go share that language with their new community, and they're going to want to do what? Travel. So let's say they learn Spanish. They're going to go to Spain and try to speak Spanish, right, as often as they can. And then what does travel entail? Exercise, walking, suitcase carries, right? You're talking about, kettlebell swings, right? All those things, right? It involves all that. Shoulder presses, right? So all of that starts with, hey, my parents learned Spanish. Pretty cool. And now they're exercising, they're walking, they're engaging in community, they're doing so many other ancillary things. Those are the impacts that we need to start talking about that are going to have a true impact on health span and lifespan.
Yeah, yeah. No, this is all very interesting, and also just thinking about the messaging. You have an investor campaign focused on the longevity economy. You had also announced a $20 million stock buyback. Given all of these developments, what is your core message right now that you want investors to take away? And along with that, what are the top priorities for Abacus moving forward?
Sure. When investors look at our business, we're a business that's been in existence for 20 years, and we're a very profitable business, right? Like you can look at us comparatively to any other public company. We trend growth rates at north of 50% a year with EBITDA margins greater than 50, right? That's pretty unusual, right? So we're growing well and we're a profitable business, and that's based upon the client first and education first. And when you now start to apply things like how we're utilizing data for customized solutions, whether that's in the pension market or we're using it in financial services, those growth rates can continue and will. And so as people look at our stock today, we're very excited about where we are today from a position standpoint, but even beyond that, where we're going.
Mm-hmm. And I do want you to address quickly, there is, of course, the Morpheus short seller report, but what are you doing to increase transparency and rebuild investor confidence?
Sure. We've always been transparent. I think that the report itself was a little misguided, and we were a small cap stock that was a little bit thinly traded, and that made us a candidate for that kind of report. We haven't honestly changed much in our business because what we do is that we aggregate contracts. We run a very balance sheet light business, contrary to what the report was suggesting we had exposure to longevity risk. I mean, ultimately, what that report accused us of was paying too much to seniors, right? That's what it said. It said that we pay too much to seniors. And our premise was, well, when you look at this, the investors that we work with, we sell to a very smart, intelligent buyer. There's some of the largest private credit funds in the world, from Blue Owl to KKR to Apollo. They're pretty smart, and you're also suggesting they're overpaying. And I think that when we sit back and we look at things, in fact, what it really did, I try to find the grace in everything. And in that example, the short seller report put a lot of eyeballs on our stock that we didn't have before. Volume's been up. We took advantage and we were able to clean up the capital structure a little bit, and we converted all of our warrants, which was announced yesterday. We did a buyback. Our employees dipped into their personal checking accounts and bought stock because of the opportunity, because all of us see, quite clearly what I think the rest of the market sees. We're covered by 6 analysts, and not a single one changed their position. We're still all overweight and buy, and all their price targets are still the same. So, from our perspective, that was just a short-term blip that someone was trying to be advantageous more on a market play than trying to actually report the qualities of any business. Because, mark my words, we have no problem being challenged by anyone to suggest that, how we do things from an accounting perspective. But for us, it's quite simple. We buy an asset for $1 and then we resell it, typically within a 6-month period. So, there's not any issues related to a mark. It's what your buyer is willing to pay for it.
Lastly, Jay, just looking forward, tell me a little bit more about ABL Tech. I know you mentioned your use of AI and machine learning. What's on the horizon? What are you most excited about on the technology side?
Yeah, the growth in ABL Tech and the pension area is where we're really focused on, and that's been an area that could really use some additional technology, updating technology. My dad was a fireman for 40 years and received that pension, and for him to log in and track that was always troublesome for him. And so a lot of those systems are antiquated, but also when you think about the pension markets, some of them haven't been performing as well. They have things called unfunded liabilities, and we can help them audit that just by managing how they do their payments better and managing their population better. And so, ABL Tech built that from scratch, utilizing AI and large language models and other processes and adopting new technology rather than trying to reinvent it. And because of that, that's given them really a huge advantage. And we're seeing that, I think, going to have much larger impacts federally. And as now, I think what I'm probably very proud of is that not only can we make pensions more profitable, but potentially the federal government. And if we're able to pull that off, I'm going to sleep very well at night.
A lot to look forward to. We will leave things there. Jay Jackson is the CEO
Great.
of Abacus Global Management. Thanks, Jay, for your time.
Thank you. Appreciate it.